Hi guys, Ben here and welcome to Motivation to Invest. Amazon is an incredible company which has seen incredible growth over the past few years. The company was founded back in 1994 by the incredible Jeff Bezos, who's an amazing entrepreneur. That was just 26 years ago, and Jeff Bezos noticed the incredible growth in the internet and decided to create a business model to fit that growth. And boy, was he successful. These days, Amazon is a powerhouse. They have 50% market share in the online e-commerce space, and over 71% of US households are members of Amazon Prime. But Amazon is not just an e-commerce giant, they're also a leader in cloud services with their Amazon Web Services. Microsoft was left playing catch-up with their Microsoft Azure platform. But that's not all. Amazon has big plans. They're working on vertical integration, in which they wish to own the entire supply chain. Recently, Amazon has gone and ordered 100,000 electric vans from the startup called Rivian. But that's not all. Jeff Bezos also wants a fleet of planes, and Amazon has expanded its cargo fleet with 15 more planes, and they aim to have over 70 planes by 2021. But that's not all. Amazon has its fingers in so many different pies. From Amazon Alexa to Amazon Music, Jeff Bezos' empire continues to grow. They also have Twitch, the streaming service, Amazon Payments, Amazon Fulfillment, Kindle, Amazon Fresh. Now, if you guys watch this channel regularly, you'll know that when I'm investing into stocks, I look for companies which have a strong brand with exceptional management and exceptional product offerings. Amazon ticks all those boxes. Jeff Bezos has skin in the game. He founded the company over 26 years ago and still has 11% stake in Amazon, making Jeff Bezos the world's richest man. So generally, I tend to analyze companies from a qualitative side, which is looking at all the stuff we just mentioned, and also a quantitative side, looking at the numbers. So let's dive into the numbers real quick for Amazon. The sales growth for Amazon over the last period, so that's only over the last quarter, has been 37%. Their earnings per share growth has been 340%, and the company has averaged a 3-year compounded annual growth rate on the sales of 27%. Now, generally, I say a growth stock is a company which is growing at least 15 to 20% per year. Now, that is a great achievement, even to be growing at 15 or 20% a year. What we see with Amazon is it's growing faster than that, partly thanks to the tailwinds from the global health crisis, which has locked down many brick and mortar retail stores and forced many people to shop online. But what's even more incredible is the size of Amazon, and that's what I'm going to be discussing in this video. Because how big can Amazon really grow? Because if Amazon ticks all these boxes, it's an incredible company. Their price to sales is around 4. Price to earnings ratio is still quite high. That's around 70. So the valuation is quite high. But with all these incredible growth drivers, Amazon seems like a no-brainer for investment. But the only thing which is putting me off increasing my stake in Amazon is the company's size. Because it's just a simple fact. The larger companies grow, the harder it is for them to maintain their growth rates. And in this video, I'm going to find out why. So what's Amazon's market cap today? Amazon currently has a market cap today at around $3,000 per share of $1.59 trillion. Now that is incredibly high. So what is market cap? Well, market cap is a simple metric. You take the number of shares of the company and you times that by the price of the share. And then you get the total value of the company as if you are purchasing the entire business. Now, I've searched for studies high and low on why larger companies tend to have their growth slow. So I'm going to read out to you guys a few of those studies. The first from Forbes is the law of large numbers. As a company gets bigger, each percentage of its incremental revenue suddenly represents a fundamentally larger number. As the base grows, the amount of new business needed to make a material difference in earnings also rises, increasing the pressure on sales to find new markets, new categories, and new geographies. In other words, the larger a company becomes, the more the entire engine has to work harder. And that makes complete sense. When a company gets to a certain size, it takes a lot more to move that needle on the stock price. A company's growth is also inhibited by market penetration and market maturity. For example, Amazon already has 50% of the e-commerce market in the US. So just on sheer numbers, Amazon only has 50% more market share to possibly take. And even that could be more difficult because the rest of the e-commerce space is very fragmented with lots of niches. So you've got Etsy, which is very specific, very niche. handmade products, and then you've got everything from online factory parts manufacturers, online auto parts manufacturers, and even fashion retailers. And who's going to buy clothes? On Amazon. So it does seem that Amazon is hitting the limits of its share of the e-commerce market. And that's why we do see Amazon focusing more on improving the efficiency of their engine, and also investing more into these new and diversified bets, because a management's job is to achieve high returns on invested capital for shareholders. That is a management's job, is to allocate capital. So the capital comes in from Amazon's e-commerce business and Amazon's cloud business, and Jeff Bezos' job is to allocate that to the best areas with the highest returns.
We could make trillions.
Why make trillions when we could make billions?
A trillion is more than a billion, numbnuts.
That's why we see Amazon making lots of new and diversified bets, such as even entering the healthcare space. So the third reason is psychological self-protection. So generally, as companies get larger and they are more mature and they own more of the market share, they tend to not take as many risks and they're happy coasting along. Now, the great news about Amazon is I believe Jeff Bezos does not have that mentality. He's constantly pushing the boundaries, constantly looking for new and diversified bets. Amazon's famous tagline is "It's always day one," and they aim to run this gigantic company as if it's still a startup. And so far, they're achieving that result. So Jeff Bezos is doing all the right things, but is he hitting the limitations of economics? According to this report, he is the largest companies by market capitalization. And as we can see, number one on the list is the Saudi Arabian oil company. And then we have Microsoft, Apple, Amazon, Alphabet, Facebook, Alibaba, Tencent, Berkshire Hathaway, Warren Buffett's company, Johnson & Johnson, Visa, Walmart, and Nestle. Now, this is the most recent I could find, but Amazon is actually the second largest company in the world by market cap at the moment, according to this data right now. So Amazon is truly pushing the boundaries of market size. What I want to do for you guys is to put all this into perspective. So the GDP of the United States is $20.5 trillion, and the market cap of Amazon is $1.6 trillion. So let's say Amazon can get to $2 trillion. Then Amazon now makes up 10% of US GDP. So firstly, let's rewind. What is GDP? Well, GDP stands for Gross Domestic Product, and that is the market value of all finished goods and services produced within a country's borders. So if we break down this $20 trillion GDP for the US, and we break it down by dividing it by the US population, we get approximately $66,666 per person per year in value created. Thus, we could make an assumption by breaking this down further. If Amazon's market cap is $2 trillion and the GDP is $20 trillion, then each US citizen on average is approximately spending 10% of their finances on Amazon products and services, either directly or indirectly. The GDP of the UK is $2.866 trillion. So if Amazon reaches $2 trillion, which I believe they will do very soon, then that is nearly larger than the GDP of the entire UK, which is $2.866 trillion. So to put things into perspective, that means all the industries, businesses, and services in the UK only make up slightly more value than the market cap of Amazon. The GDP of Europe is $18.8 trillion, which is 22% of the global economy. Now, the real purpose of this video is to find out how big can Amazon grow to, because we know there's all these tailwinds behind the stock, and the only thing I personally can see stopping the juggernaut that is Amazon is its market cap. So let's break it down further. The GDP of the USA, let's say $20 trillion. The market cap of Amazon, $2 trillion. Let's say it's achievable definitely for Amazon to get to a $2 trillion market cap. That's on average each US citizen spending 10% of their money on Amazon goods and services, either directly or indirectly. Now let's say we can get that to 20%. So on average, US citizens are spending 20% of their finances on Amazon goods and services, either directly or indirectly. And so that will make the market cap $3.2 trillion. So $3.2 trillion, that will be larger than the GDP of the UK. So that is where I could see Amazon share price getting to in the future. So to me, I could see at least one more double from here. But could I see a double again? To me, that seems quite unlikely. No issue with Amazon and the management and the way they're running the business, but just due to pure economics. So to double again from that value, that would be $6 trillion market cap. And as mentioned earlier, the market cap of the entire US is $20 trillion. So Amazon will make up a third of the US GDP. And to me, that just doesn't seem likely. But I can definitely see at least one more double from Amazon stock. Now let me know in the comments below if you guys have followed me in this video. It's quite difficult to get your head around, but when you do put things into perspective, you can see that Amazon is running out of runway. With the US GDP at $20 trillion, Amazon's nearly at $2 trillion already. It already makes up nearly 10% of US GDP. So that is why in my personal portfolio, I do have a stake in Amazon and I do like the business and I'd love to load up the truck on that stock. But the thing that's stopping me is this economic pushback. And Amazon also doesn't have China, as from 2019, Amazon closed down its operations in China. And diving into this chart here, we can see if we take the S&P 500 and we compare it to smaller cap stocks, we can see over 2020, we've seen smaller cap stocks, such as those in the Russell 2000 index, have outperformed their larger cap brothers. So if you're after major growth as an investor, such as 5x, 10x returns, then you definitely need to look at smaller cap companies, and that's just economics. However, what must be stated is smaller cap companies tend to be more risky for investors. So you have to balance the two and structure your portfolio in a way that's best for you. But with that being said, if you guys found some value in this video, then feel free to give it a big thumbs up. And if you haven't subscribed already, what are you waiting for, guys? Go ahead and hit that subscribe button, turn that notification bell on, only if you want more investing tips and exclusive stock market picks, which I'm personally investing into. With that being said, I hope you guys have an incredible day, and I'll see you in my next video. Invest safe.